Yeah, I think we're live. I'll just double check with our team. And yeah, I think we are live. I think, okay, cool. All right. Yeah. Welcome, everyone. Fantastic to be here. I'm personally extremely grateful to the two guests that we have here today on another episode where we try and talk about various things in the crypto space, especially around where this is headed and what's happening. This one is a new edition where we want to talk about a few things beyond the stuff that we usually talk about, which is chain abstraction or interoperability in general. And I have two wonderful people here to help me talk about this. There is, of course, Anurag, who is one of the co-founders of Avail. Hello, Anurag. Thanks for joining in today.
Yeah, very, very good to be here. Thanks for inviting me.
Of course, and our other guest is, of course, Anna, who's one of the co-founders of CowSwap. Anna, thanks so much for being here.
Thank you so much for having us.
Fantastic. So let's jump right into it since we are a few minutes late. Guys, my first question, everyone knows you guys and the projects you represent. I think we'll not perhaps go down that route. But even so, skipping formal introductions, I think one question I'll just ask both of you is what was that one piece of insight that led you to building what you're building today? What was that one fundamental thing that you saw was a problem or was a clear need or was missing in the space that and you said, I know the solution to build here. So maybe we start with Anurag.
Yeah, I mean, I think it's a interesting question. Yeah, I mean, I've been in the space since 2017. So, in general, like that time was a very different era. That time, I actually come from a fintech and regtech sort of a background. I had nothing to do with blockchains really. In 2017, there was this funny game called CryptoKitties, which swammed Ethereum, like brought it down. I mean, not brought it down, but basically clogged it that it couldn't be used. I was working on this very fintech country specific startup, and then I saw this problem that there's this huge potential to build scaling solutions on that would supplement Ethereum, and I thought so. I mean, that was like really the trigger point. At that point in time, I was deep into Bitcoin land, and so I thought Ethereum and Ethereum layer 2 scaling was the way to go. So that was my personal movement.
Yeah, and what a fantastic job you guys did of a small company called Polygon. But then, of course, you've now gone on to start Avail. So, can you just lend that one piece of insight that said, hey, I want to stop what I'm doing right now, and this is what I want to start doing. What was that one moment, if you could define that?
Yeah. I was actually on like a very interesting discussion on stable coins and tokenization yesterday, and there was this discussion going on about like Meta or Facebook trying to get into the space again through a stable coin foray, right? Like, and I remembered 3 4 5 years back when Meta was trying to launch Libra at the time, right? Like, and to be very honest, like when we were building Polygon at that time, if Libra had come, it would have been like a existential crisis for a lot of people in the industry. I mean, just for the reason that Meta has tremendous distribution in that sense, right? Like, so but like yesterday's discussion was more about like, okay, Meta is coming into it, but it's all powered by public infra, right? Like, I mean, stable coins have grown so fast, right? Like, I mean, and one thing they were harping on is that there's just too many chains, like too many chains coming into the foray, and this is something that we anticipated back in 2020 when we were starting Avail actually within Polygon, when the roll-up centric roadmap for Ethereum was just starting to take shape. And we knew that like these roll-up stacks would be commoditized. There would be hundreds of thousands of chains. I mean, there already are, and that's playing out as we could. So I think basically our main trigger was we are going into this world of 1,000 chains, right? Like, I mean, and as opposed to how blockchains began in a very brand centric way, in the sense, you know, that I have Ethereum network or Solana network or BNB or whatever, right? Like, but I think the future is basically like this sea of chains which might not even have an identity. It's just pure block space, and all of this is, you know, we think is going to be built in a very horizontally scalable way. And that was really the insight that we thought of when we started Avail, that can we build infrastructure for you know, like enabling thousands of chains, and for them to work like one chain, right? Like not look like this 1,000 separate islands. So that was really our key insight.
Fantastic. Thanks for sharing that. Yes, Anna, over to you. What was the genesis moment for CowSwap? I think this is fairly well documented, but it'd be great if you can talk about it.
Right, yeah, of course. So I think it's probably, if you have to break it down to one thing, is that, I mean, originally the project span out of Gnosis. Gnosis is working on prediction markets. Prediction markets essentially create outcome tokens for like what the different outcomes of the prediction market are. And then you have the issue that, of course, these need to be tradable, because otherwise nobody's attracted to even like create a position in the first place. However, finding like significant liquidity for these outcome tokens can be a challenge. So this is where kind of like the initial starting point came into why we were looking into batch auctions, because batch auctions are not only trading tokens one-on-one, but essentially you combine a multitude of different trades into one single batch, and then you find like a common solution for every different transaction that is within this single batch. And that allows you to then essentially also do some fancy stuff like ring trades and like find like a better, like basically are not dependent on one single liquidity solution, but like can find a magnitude of like different potential trading routes and like part like a source of where you get the liquidity from. So this is how we initially looked into batch auctions. And then sort of around the same time, this is what I'm saying, it's kind of difficult to break it down to one single reason, was also that like not like MEV was not a hot topic, right? Like that came like a couple of years ago with the Flash bots or Flash boys back then white paper. But before that became a mass known issue, there was already some research done on the topic of MEV, and like those more like those people who have been around in the space for some time or focus on research, they signaled this pretty early on that, hey, there's like some ways for certain parties to extract value from users, because they have like all information is publicly in the mempool available. So it's very easy to actually try to front end existing transactions and extract some value from other users. And that's something that also, if you go way back, I think there was like in it was super early. Like it was definitely before 2017. I don't remember what exact year was definitely before then. There was like Vitalik responding to it, and also like, oh, one way of solving that is by batch auctions, because that way you basically, even though there's a public mempool, you make sure that all transactions are in one single batch, and then you settle them at a uniform clearing price. So it doesn't matter what moment in time you submitted your trade, everybody's receiving the same outcome. And yeah, so that's basically, it wasn't the main motivation. Again, the main motivation was there's so much fragmented liquidity. And that's actually a problem that's accelerated now based on also what Anurag said, right? Like now we have this magnitude of different chains. Now you don't have Ethereum, but you have like all these hundreds of other chains on top of it. So liquidity is even more fragmented. And like basically the idea of batching different transactions together is to overcome this problem of fragmented liquidity and bring it back together to ultimately ensure that users get the best possible access to liquidity no matter where it's coming from.
Yeah, got it. No, thank you so much for sharing that. So just because we are on the subject of Anurag, you brought up how tokenization, stablecoins, RWAs in general, and Anna, you were talking about like how you solved this very specific problem of of MEV through batch auctions, and CowSwap is an excellent example of that. But just coming to like DeFi in general, I think that has proven over time to be probably the only thing that has found like very clear product market fit, if you include like RWAs, like stablecoins and everything into that one bucket. And but given the fact that, and I think both of you spoke about the fact that we have so many different chains, and the fact that it's probably going to accelerate even more so than what it has already gotten to. It would appear that everything that we had hoped for to happen in DeFi, especially from the perspective of composability, how these DeFi will just be all of these Lego blocks which you pile on, and then you get this fantastic stack of things which will allow you to do magical stuff. But now that seems to not exist, or if it exists like in a single chain context. But now you have so many different chains where value keeps flowing in and out of, and someone's hot today, tomorrow it's someone else, and things like that. So value also keeps moving. So in this context, would it be fair to say that like the composability aspect of DeFi that was promised to all of us is now well and truly lost? If it is not the case, why not? Or is there a way to redeem it and get it back so that it can become this powerhouse that can start to basically do a lot of things in the real world? Either of you can take this up, whoever wants to.
I can go first, and then Anwar can add to it. So first of all, yeah, I mean, it has definitely lost some edge of composability. I wouldn't say it's completely lost. Like, there's still a lot of composability available. So for example, what we just launched is an integration with flash loans. And that's, for example, enabling for any lending protocols to now use Cow Protocol under the hood. If a user wants to, for example, exchange their underlying collateral, their underlying debt position, or whatever they want to exchange, instead of having to go through like this annoyance of like getting whatever token they borrowed back to withdraw their position and then recreate a new position, they can now do this with a single click, single transaction via Cow Protocol, which is like really nice and still facilitating this composability of like making it easy that different protocols can easily integrate with each other. However, your point is, I would say, 100% accurate, that with having all these different networks and also like the multitude of different, even stable coins that are created, right? Like you have now so many different assets that all replicate the US dollar. And then you have some still a lot of liquidity to use on mainnet, but then mainnet, you also have the issues like gas costs are high. And then you also have like now a lot of the liquidity moving slowly over to layer 2s and like other chains. And so essentially, I guess one of your questions was like, can we overcome this? And I think we have to, if we want to make DeFi really like this mass adoption possible, that like the next, people always like to talk about the next 100 million users are coming to DeFi. I think to facilitate this, yes, we have to overcome this problem. And it's something that Cow Protocol is also working on, is essentially a way that the user doesn't have to worry anymore about like, oh, am I currently connected to Polygon? Am I connected to Ethereum? Am I connected to Avalanche, Solana, or whatever? But actually that they just have a wallet. They know this is like the total amount of assets I'm holding in my wallet. And if they want to do a trade, they can do it. And then the underlying protocol is taking care of routing through wherever is the best liquidity. So assume I'm going to do a very large trade. I mean, obviously on a $10 trade, it doesn't really matter. As long as there's some liquidity, it doesn't really matter what network I'm doing it on. But if it's a larger trade, there could actually be the possibility that it makes sense to route 50% through Ethereum, whatever, 30% through Polygon, and like 20% through something else. And that's something that we're working on. That essentially you want this user experience where under the hood, you abstract the complexity away. The user just knows, oh, this is my wallet, this is the trade I want to do, and then underlyingly it's taken care of to route your trade wherever you get the best possible outcome for the user.
Got it. Yeah. No, thanks for that. So you spoke about abstraction. Maybe Anurag, you'll talk about unification.
Yeah. I mean, all of this is like all interconnected, right? Like, I mean, essentially, because we've been going on this horizontal scaling roadmap, that Ethereum initiated, right? Like with the rollup centric roadmap. Of course, we there are number of chains, and of course there is fragmentation. In general, like the rationale behind Ethereum first prioritizing scalability over, like let's say introducing some native interop features on the mainnet, it really was, like it's just experience issue, yeah, right? Like at that time, scale was very important, and so it was very important to come up with some scaling solutions, right? Like that started with Plasma, then like rollups came in, for example, and so on. And now lately there has been like this push towards enabling more native interoperability, which like essentially we started avail with that understanding that you need to solve for scale, but also need to solve for interop. And really the rollup centric roadmap is one of the best structures for doing that, like relative to doing separate L1 chains with different consensus mechanisms and stuff like that, right? Like so we are absolutely on the right direction. But I think I also try to answer this question from an a new chain spin out perspective. Like when someone comes to us for spinning up a new chain, um, it's basically it's cheaper to spin up a roll up compared to bootstrapping a new L1 chain. So there's an of course a benefit to that, but then there's just too much else that they also need to do. Like every new chain that comes up also needs to do liquidity bootstrapping. They need to ensure like a frictionless pathway for users on other chains to like come to your chain or send capital to the new chain, for example. So and there's a lot of tooling around this new chain that also needs to be built, right? Like I mean, you need to have oracles, you need to have stable coins. So there's a bunch of bootstrapping things that you need to do in order to do that, right? Like, and so that also leads to a lot of like fragmentation, which may not be like very evident in that sense. And in that sense, like basically, um, it is certainly lacking today. Like I mean, the DeFi landscape, etc., for example, has fragmented. You could also say that not every chain requires all of this infrastructure, right? Like I mean, if you are, let's say, a gaming chain, if you're like like a social chain, for example, you don't have any business trying to bootstrap a DEX, for example, or a lending borrow protocol. And so that's where the missing gaps are, and which of course a lot of projects are now working on, in the sense that if you're a new chain, if you want to bootstrap your economy, what infrastructure will enable you to like bring users and bring capital to flow into your new chain. If you're a new chain, you typically don't have the best apps or financial infra on your chain, or you may not even need it. Like a gaming chain might not really need a Uniswap instance, for example. But can we enable infrastructure that allows users on this chain to kind of swap assets on, let's say, Base or Lens, for example, which already has a liquid DEX market, or even Cow Swap, for example, so that like in general, that chain doesn't need to reinvent the wheel again. Essentially, what we are really doing is right now replicating all the infra that is required onto every chain, and I think that's a waste of resources, waste of time. If we are able to enable this cross chain like abstraction, it solves this problem, right? Like I mean, when you go to an Amazon, Amazon uses a set of payment processors which are used by the entire industry, right? Like I mean, it doesn't have to bootstrap its own payment mechanism and backend and stuff like that. So I think it's all a Legos market, right? Like I mean, essentially everything is Legos. DeFi is Lego. Like all these primitives are Legos. Now these Legos need to be interoperable. If we can get to that, then we kind of bootstrap this economy very fast.
Yeah, I think you made a very important point there about how perhaps this was a choice to be made, or perhaps there was no choice. It was just abundantly clear that Ethereum needed scale, and it pushed for scale, and it pushed for scale through the roll-up centric roadmap. But here we are, and now of course we're talking about like two different projects over here, where you guys are, of course, at 3, in fact. We probably, Avail and Arcana are probably looking at solving this interop problem, coming at it from 2 different angles. But you also have Kauswap here who are saying, we don't know if this will get solved, so we're going to solve it ourselves, our own way. So you have the Cow protocol saying, we will build out whatever our front end needs in order to be able to serve the users. So it's almost like this race between, if interop will get solved versus, apps just saying we're just going to figure it out for ourselves and we're going to solve it because we're not going to sit around waiting. And I think both points of view are absolutely fine. But I think the question I would like to ask you guys is interop, like, do you guys view it as like that one big giant sort of like elephant in the room, the big problem that if we solve, then I think we can start to really accelerate to perhaps even the meme that is mass adoption. Anurag, do you have any specific views on this? Or do you see other things that are still needed to be kind of resolved?
See, in a way, if you kind of think of it, interoperability is really extension of scalability, right? Like, I mean, interoperability, like scalability doesn't work without interoperability. Like, that is my personal opinion from a horizontally scalable manner, right? Like, I mean, there's really 2 schools of thought in public blockchain discourse, right? Like, I mean, do you want to be like a vertically scaled chain, like let's say a Solana or an Aptos or a Sui, or do you want to be a more horizontally scalable configuration? I think the horizontally scalable configuration will win out. In general, the idea is that like I said, like yesterday I was on a discussion and like Meta was being discussed, right? Like Meta apparently wants to use stablecoin infrastructure to do creator payouts. Now, if you kind of think of it, if Meta decides to kind of do this, of course they will do it in phases. If they want to launch today and with the kind of distribution they have and the volume of payouts, and this is just, I'm just talking about transfers, stablecoin transfers, right? Like we're not even getting into more complex programmability. Even like at Meta scale, you need tons of block space to handle their volume, like essentially. And none of this will work in isolation, right? Like, I mean, it's not like let me do 100 million transfers on this chain and like 100 million transfers on that chain, for example. Like, so it's going to need to come together. So I think basically we are at that stage where, to be very honest, stable coins are being talked about a lot in fintech, in a lot of circles, right? Like, I mean, you've already heard of all the acquisitions that are happening, for example, and so on. And so everyone is now seriously looking at this in general. And Meta being Meta, like they did this experiment with Instagram with Polygon a few years back. That didn't, they didn't continue that for after a year, but I think now they're looking to come back. So I'm saying basically we have to look a little bit beyond, because like now that mass adoption thing that you talk of is actually pretty near. Like it may not be for like very complex contracts and stuff yet. It may be only for payments, for example, today, but you're already seeing signs of things like US Treasury is being tokenized, for example. And so once you have stable coin, there will be some stable coin yield. Today it is safe yield. Now that 4% yield people will ask for a 10%, 15%, 20%. So all, I think we are at that stage where this is poised to take off, and we have the scale for sure, right? Like, I mean, at the moment. And so I think this is just a matter of time, I would say.
Gotcha. Yeah. Anna, do you have a specific view on like, are we ready for like the prime time? Anurag is obviously, saying wonderful things about how things are close. People like us couldn't be happier about, the fact that this industry is ready to witness what we've been promised for a very long time. But are we ready? And if we are not, where are we still missing? I think interop is the big thing, but what are your views?
I think if you were asking, are we more like, are we like, oh, in general, if you compare how we are doing now compared to 2017, I think there's a huge gap. Like, there's like no question that we are in a much better position now. So I would say, are we ready for the next wave? I would say for a next wave, potentially yes. Are we ready for mass adoption as in like everybody? I would say definitely not. So so scalability is obviously a huge thing. Um, that there is of course now already a lot more solutions that enable like some, for example, I don't know, like new NFTs that are being launched. Obviously they're not going to Ethereum at the moment because of high gas prices, execution speed, etc. But overall, there's solutions for where they launch. But then scalability is definitely still something I would say that's like my number one that still has to improve, like finding like a better solution overall for making all the difference, all the different networks also interoperable with each other. But I don't think it's the only one. Like the other item for sure is UX. Generally, like there's still so many concepts that we expect users to know, or to learn and think, okay, whatever, like we managed to onboard ourselves to blockchain, so can others. And I think that that's just something. If we keep having this assumption, then then we're unlikely to succeed, because like not everybody is so much into this technology, wants to learn about concepts. Like simple things like why do I have to pay gas costs? Like why do we call it gas? And like, I don't, it's like just simple concepts even that we don't even think about anymore because we just do it on a daily basis. That still is a huge area of improvement, which we always notice when we onboard new people, for example, also to our team. Like we love doing this when we have a new joiner, and not everybody in our team who is newly joining, depending on the position, has previously worked in blockchain. And then we do an onboarding session where we basically just ask them, okay, like we send them some funds to a wallet, and then we let them try out Cow Protocol and see how they go. And then you see, oh wow, there's a lot of concepts that for us is just like the day to day, and for them it's like confusing, and they don't exactly know what they're doing. They don't feel comfortable yet. They wouldn't feel comfortable spending, like using it with a lot of money. Anyway, so that's another issue. And then I guess also if we talk about mass adoption, then we're not only talking about like every individual user, right? But also like banks, different industries onboarding to blockchain. And I think for that, there has been a lot of progress on the regulatory environment, but I think there's still quite some uncertainty also in many countries, which makes it hard for institutions to choose how they want to, what's their stance on blockchain. Like a lot of banks, etc., are looking into it, but are not really not fully committing to move into it. And then maybe one last thing that I can think of, but I'm not an expert on this, but like generally like data availability. So I think a lot of businesses also need like reliable, verifiable, and fast data that's also off chain. And I think making this link, making it available with minimized trust, with low latency, is also like still a challenge that hasn't been fully solved yet.
Got it. So UX, data availability, of course, that you spoke of, and again, the ever-present sort of like regulatory clarity sort of situation. Got it. Yeah, I think those are all extremely valid points, and I think Anurag mentioned it earlier, where he said that almost all of this is byproduct of chasing scale, or even achieving scale to a very large degree, which I think we can safely say we are at a point now where there's no looking back. I think horizontal scaling, modular roadmap, we're definitely going to achieve like global scale through this sort of like a model. Maybe even with vertical scaling, it's going to be possible. I'm not sure. The Solana guys at least seem to think so, but we will see what happens. But I think what we're saying is that, I think what both of you are saying is that I think there is still some work to be done in general, but we are in a much better position than we've ever been. But this would also then mean that, let's say what Anurag was talking about, let's say Meta is going to start making creator payouts in stablecoin. This obviously means that a whole bunch of people are now going to be sitting with assets that have a bunch of destinations to be able to kind of spend or expend or put to work within the blockchain realm. And you're going to start seeing this influx, which I think is what he was talking about, will be uh, this almost like this path to mass adoption in a sense. Uh, so it would beg the question that, are there things, are you seeing like people now say start thinking about things in a fundamentally different way, about things that you need to build in within the space and how they want to go about building it, what are the things that are important about the products that they're building, uh, if or are we still sort of stuck with that whole, like, say, 2021 2020 sort of part where now everyone's just hoping it happens again, and people are still focusing on things that are more like hype oriented. What's the general sense that you guys are getting? Will we be ready for all the meta creators and their USDC USDT, or people are still going to be trying to scam them?
Yeah. Yeah. See. Yeah. To be very honest, right? Like, I mean, just staying with the meta example for a little bit, right? Like, I mean, I don't think if Meta goes through with that plan, for example, you stable coins are going to be used in the manner that we generally, like the cryptosphere are used to. I mean, mostly, like those users will not even know they own a wallet, for example. And in general, it will be encashable to local currency very fast, for example. So it's almost like an invisible stablecoin rail I mean, if you look at what Stripe has done after the acquisition of Bridge, for example, right? Like, so why Stripe has done that acquisition is because it's actually an operating model addition to their portfolio, in the sense that because Stripe runs global financial infrastructure, they have to kind of do country specific local integrations everywhere. So in their case, the stablecoin rails are really their last mile settlement infra in general. So it's not necessary that the way these companies use stablecoin rails or blockchain rails is going to be the way that we are, I mean, used to now, like, like setting up a MetaMask, for example, switching networks, bridging, for example, and so on. So that is one thing that is different. In general, the thing is that, like, if you zoom out a little bit, right? Like, I think what has happened over the last, like, decade or so, from the time Ethereum started, is that you can, of course, there's a bunch of progress done, bunch of things that have been built over the years, right? Like, but it is really, like, to me, it also you can view it as an experiment in which there's a bunch of infrastructure and primitives that were built on these natively minted assets, which, like, have some intrinsic value, right? Whether it is speculation value, whether it is, like, something related to this nature, for example, and so on. And with that assets, like, we made, like, DeFi, we made infrastructure, like, so all of that played out. And so if you kind of zoom out and look at it, this is like state of the art financial infra that has been built, really, on these rails now. But the reality is, all these natively minted tokens, like, have some valuation parameter. It might be, let's say Bitcoin has 21 million in supply, it's a store of value, for example, and that's why it's valuable, or some other valuation metric, right? Like, but it doesn't have, it's not co-opting, I mean, I will not say not exactly, but, like, it doesn't have enough of the real world economy baked in, right? Like, so for example, so there is the crypto economy is mostly run in parallel, and then there's this whole other real world economy. Now when we are seeing these RWA assets coming on chain, for example, so you get a lot of these flows, a lot of the yield that is coming from work outside of the, like, off chain, for example, into the public blockchain space. Like what I mean is, like, if you kind of look at every, like, a lot of the chains that launch today, each chain has this liquidity mining program, and like, basically there will be some incentives, and ongoing maintenance is done through, like, let's say, some sort of token inflation yield, for example. Of course, there's protocols that do revenue, for example, and so on. So there's also that element. But I'm just saying that if you are kind of trying to come up with these incentives, all of them is through token inflation, for example, and so on. And this is basically short-lived, for example, and so on. So you have to tap into some sort of real world yield to kind of, like, power these use cases. Now imagine some of this real world assets coming into the public blockchain, and all this sophisticated financial infra that we have built, if is applied to these assets, then this supercharges the space. And and I think really, that is that ingredient that will kind of, like, propel us towards this mass adoption might look very different from where we are right now. Like, I mean, most people using it won't even know that they're using blockchain rails in general. But the people who develop on top of it, the enterprises, the startups, the fintechs, for example, all of them will know. And then it's like, it's basically up to the, the UX, for example, and so on. So yeah, that's my 2 bits.
Got it. So if the days of just inflating supply, speculative value, and passing that down as yield are probably numbered, and we have to make this shift into trying to look at real yield, as you put it, as being the backbone of any sort of like way to like incentivize usage, and or all of these other things that we try and get done, right? Boosting security, boosting usage, all of those sorts of things. You're saying the fundamental shift has to be no more just like inflating supply of a speculative asset. Instead, it has to be backed by real yield, and that's the fundamental shift. If we make, then we'll be prepared to sort of like welcome in uh, like be taken more seriously as an industry in general. Also, I would say. Um, Anna, what are your thoughts? What is the? Are you seeing anything in particular that we need to fundamentally start changing, or are you seeing this happening already, or what's your take?
Yeah, maybe just to put a little different, like the typical cow angle on this topic, and focus on the UX part of things. I would say we definitely see a positive change in the sense that what do we focus on, or what does cow focus on, is essentially this, like, the angle of make DeFi seamless and safe for everybody. And I think there's obviously different components that you need to for mass adoption, but like this is like the area that we specifically focus on. And and there I can clearly answer, yes, there has been a positive shift in the sense that what has been a cow approach to enable safer transactions and make it like easier for users to use it is that we introduced an intent-based system. But not saying we didn't invent intents, but we were the first one to actually adopt intents for DEX. And we launched in, what was it, 2021. And at this point, I'm getting confused with that. So was it 2020? No, I think it was 20. Yeah, it was 2021. And then I think it took 2 years for Uniswap to actually also adopt intent-based standards, and before that, 1inch did. So you do see a shift. And why intent's important is because it allows users to basically just express what they want to achieve and not specifically set all the parameters of like that is like that they have to set. But they would just say high level, like to basically saying this very simple. They just say, I want to achieve X in the best possible way. And then other parties who are more sophisticated, they can actually ensure that it's being executed in the interest of the user. And so that, I think, is a really important step to make it A, easier, and B, safer in the sense that they don't have to understand all the risks that happen in DeFi. Like they don't have to understand what even MEV is, for example, and how like value can be extracted from them. So that part, yes, has happened. But there's also still a huge room for improvement because these intents currently work well like on the same network, but there is no good solution yet to show intents across multiple different networks. And this is kind of the next step that we need to work on. And I think given like the fragmentation of networks and liquidity that exists today, that is a prerequisite in order to get wider adoption.
Understood. So intents as like us almost like this very important pillar for the way we approach users, apps approach users, or even protocols approach users, and sort of like manage
Yeah,
their expectations.
and don't get me wrong, like I'm not in the camp of saying intents solve everything. I don't think they do, but I think in specific use cases in DeFi, they're actually quite useful to make life easier for users. But I'm not like, oh my God, you need intents to put them now everywhere, because I think that has also gone to the extreme where everybody just started talking about intents and like somehow was sexy and had fundraising, and then it was like, oh, I'm
Yeah.
gonna use intents, and they didn't like fully like they didn't necessarily have a use case where you really need intents. What was just the new sexy term to use that would give you money. And I think you should still review where do intent make sense. Not necessarily everybody, but I think in like specifically DeFi, like trading related use cases, is actually an improvement. Yeah.
Got it. Okay. I think my major takeaway is obviously from that. I'll change it to say, focusing on UX to make things simpler and easier should be like one of those fundamental shifts. I think that's probably happening across the board in general, and you guys are obviously pioneers. I know we're coming up to time, but I have a couple more things I want to cover with you. Just my last proper question before we jump into one more little segment of this podcast here today. Anurag, you spoke about how mass adoption will probably look very different from how we are, from our vantage point where we are today. And that would be perhaps one of the assumptions that everyone, like I also would make, or anyone else would make, is that, oh, these meta creators going to get USDC, USDT, and now they're going to come to DeFi and spend it all, and it's going to be fantastic. Real money is going to flow into. No, you're saying obviously it's not going to be the case. 90% of them will probably just immediately off ramp it. But what are assumptions such as this that people widely make today that you feel need to be squashed, need to like end here right now, or needs to change dramatically for us to move forward as an industry? Is there one of those things that you see outside this one that you already mentioned? Is there one more? And it can be a hot take for the day. Is there one that you have in mind?
Yeah. See, I think, I mean, it's not particularly a hot take, I would say, but, in general, the reason, like blockchains came to life was a very cypherpunk sort of a reasoning, right? Like, I mean, when Bitcoin was started in the first place, it was meant to be, like nation state resistant, for example. And I mean, that was a goal really, right? Like, so there has been this, like broadly, I would say two branches or schools of thoughts in crypto and public blockchains, that blockchain should be decentralized, should be like very censorship resistant, like it has to work outside of nation state boundaries, right? Like I think that that segment is of course going to live on, because like really that is essentially unstoppable infrastructure, to be very honest. Like as long as you have miners and validators running some of these blockchains, for example, so that is going to be. But I don't think that is going to be the only use case for blockchains, because actually inadvertently, like what we have, the industry as a whole has ended up creating is state of the art global financial infrastructure. I mean, there is no question about it. Like how it works, like how traditional financial systems work today. There are these siloed financial networks in each country. Each country has their own regulatory guidelines, for example, and all of these become interoperable via something like Swift, for example, or you have these private networks like Visa, Mastercard, for example, and so on. And it's extremely painful, like when it comes to anything global, trying to do anything global, right? Like, I mean, local payment systems, like such as, like Pix in Brazil or UPI in India, for example, these are like best in class payment systems, for example, that have come. So everything works very smoothly in once it comes to a country. And overall, like the world has become increasingly globalized, right? Like, I mean, it's not only local economies. Like, I mean, international trade is, I mean, it's a no brainer. Like, that's what's happening, that's what's leading economies to grow so fast, for example. And but the reality is there's no global infrastructure that works seamlessly. I mean, there's this paper from the BIS, which is the Bank of International Settlements, which is sort of like the central bank of all central banks. So the president, Augustine Carson and Nandan Nilikani from India, for example, did this joint paper where they talk about this global infrastructure um, that they want to create, for example. And this is coming from, like banking circles, for example. And the paper, if you kind of go through that paper, the paper basically says that public blockchain, of course, I'm paraphrasing a little bit, but it's all public blockchain industry has built up a ton of useful infrastructure. Can we kind of co-opt that and build, build a, let's say, a compliance layer, for example, so that the expectation matches that of like regular users, for example. And sometimes like we vastly underestimate like how much complexity a regular user is used to. Like, I mean, today, I mean, in the traditional world, you are okay with losing your bank password because you will be able to recover it back. I mean, a regular user is nowhere ready to kind of lose a seed phrase and then learn that like they've lost their money. uh, there's a lot of trust factors that live outside of the blockchain. Like, regular people do not read smart contracts, regular people do not read code, regular people are not in a habit of like basically securely storing their passwords, for example. I mean, things like that, right? Like, I mean, essentially, trust is, there's still a lot of trust comes from the brand, in general, right? I mean, I trust the brand, for example, and so on. And you can, even in people working in crypto, like, you if you kind of ask yourself that, I mean, it's amply clear, right? Like, and so trust is a very multifaceted concept. It's not only, like, trust is not only a technical concept. Like, there's a lot of social angles to it. And so, I mean, basically, I mean, I know went on for too long, but the point I'm trying to make is really that certainly there is going to be this whole decentralized, censorship resistant, nation state resistant sort of category, but there's also going to be this lot of the traditional financial industry, fintechs, for example, co-opting this tech and using it for like things which might mirror something that already exists in traditional finance, but also going way beyond, because this infrastructure is much more amenable to interoperability, like, in the sense that if you kind of consider, like, in the traditional world, interoperability means APIs. Like, you kind of sign up for API, like you do a two party contract to use their APIs, for example. So it's always a one to one connection. In the blockchain world, once you connect your system to the blockchain, you automatically have a lot of composability with all of this. And I think I think basically that segment is going to be much bigger than people think.
Okay. All right. Understood. I think that's a very, very valuable point that you make there. Fundamentally, you're saying, like, outside of like the more traditional, like philosophical, idealistic, cypherpunk driven, value driven sort of way of looking at blockchains and what what we can get from them. There's probably tons of value sitting in this other, like the more real world, which if and it is ready to kind of flow in, but we have to be also amenable to kind of work with that, and we probably come at some of these the cost of some of these ideals and things like that, but that's the trade-off, and we sort of have to be ready for that if we want all of this value coming in. Yeah, all right, great. Anna, over to you. Is there an assumption that we need to quash in order to move forward?
Yeah, maybe to summarize a little bit, or at least it's pretty much in line with what Anurag said and express it more spicy. One could just say decentralization is not binary. So I think a lot of more like from the philosophical standpoint, of course, a lot of us have like entered the space and want full decentralization. And the cow approach is also we do want full decentralization. But I think it's more a progressive step than it is like a batch that is sometimes today is like attached or someone is like a project is decentralized or it's not. And I think what is true is that maybe down the line there's just it's like okay that some components are not fully decentralized, like what he was saying about like there needs to be like good recovery options, and maybe like there's like a world where like some of the recovery options are not fully decentralized, but like just to make it like feasible for users to actually use products. So maybe it's okay that not all components are fully decentralized. I think that would be like the spicy way of saying, oh, decentralization is not binary. It's not either decentralized or it's not, but like there can also be like different steps of decentralization. And like kind of in line with that is that also not necessarily everything has to be on chain. So there is like some things that are like really complex in computation. For example, currently the solver competition that we do in Cow Protocol is like this very complex computation essentially of like seeing what are like the best possible routes across all different transactions that are in a batch, where basically you look at all the different on-chain liquidity pools. Also potentially you can consider off-chain liquidity pools if you want to incorporate centralized exchange liquidity, and then also like just seeing if you can match like different users peer-to-peer together, and like doing that on-chain is just unrealistic, at least at the moment, to do that. And I think it's also okay to like basically embrace the fact that some off-chain computation is necessary and not everything has to be fully put on chain.
Got it. All right. So basically, certain trade-offs lead to basically over the odd sort of like value accrual or value generation, or being able to give value to users, and that's perfectly fine to be able to make in an effort to kind of eventually decentralize, I guess. That's probably the point that you were trying to make. Fantastic. I think we're at time, but I would really be remiss if I did not do this next section with the both of you. It's a very small, fun little section where I have a bunch of questions. I just want like short, quick, 1-word, 2-word answers from you guys, and then we'll let you go. All right. So who wants to go first? Very simple stuff, nothing dramatic. Anna, maybe you'll go first with it. Yeah. Okay. All right. I have 4 questions. Very simple stuff. So you answer, the more points you get. All right. All right. So we'll start. ETH or Solana?
ETH or Solana. God, you said short and fast. I'm clearly not good at it. I need more coffee. But I would say for a long time, like within the Ethereum ecosystem, it was like, oh, like maybe also partially look down up in Solana. I think we should have a clear eye on it. I think it's just, if you look at the volume they make up in equal, some days they actually make more volume than the entire EVM related ecosystem. So I think it's maybe sometimes undervalued. Sorry, that was a very long answer. I tried to be quicker on the next question.
Okay. Apps or infra?
Apps.
which is your favorite community outside of the cow community?
In general, I think the entire EVM community as a whole.
Okay. And your BTC all-time high price prediction for this cycle? Not financial advice.
No, you can't do that. Okay, I give you my ETH prediction. I feel more comfortable with that
Okay,
one.
that'll be spicy.
For this
then.
cycle,
Okay,
or
fine.
like the like.
this
Oh.
cycle. Whenever it happens, I don't know when it's going to happen.
Okay, let's just hope it goes higher than 4K. Like I would say eventually 10K, but for this cycle, I'm more skeptical. Let's say like 6K.
6K. Okay, not financial advice. All right, fantastic. Thank you so much, Anna. Anurag, quickly over to you. ETH or Solana? I think I know the answer. Apps or infra?
Apps.
Favorite community outside Avail and Polygon community?
I think Solana.
Hey, I have to clarify something. I misunderstood the first question. I heard Ethos Solana. If it's ETH or Solana, it's a very straight ETH. Yeah, sorry. That would have been a very quick response. Sorry, I'm sorry.
Yeah, it seemed like weird why, but I didn't want to. I was wondering why you were trying to.
No, ETH, very clearly. Sorry.
Okay, I misspoke. I'm sorry. I should have been clearer. All right. Okay, Solana is your favorite community. Okay, all right. We'll ask you then for your Bitcoin price prediction for this cycle. Again, not financial advice. Anyone?
Yeah, I don't know. I mean, if I were to take a figure, it would be probably a 150K, I would say. But regardless, like I think, like wherever you are in the cycle, like if historically over the last 16 years or so, right? Like I mean, wherever you have bought Bitcoin at, like you will always be the profit, is what I will say, and not financial advice.
No financial advice here. Okay, fantastic.
And just one small point also wanted to make, because like Anna was trying to like defend the Solana this thing as well. I will say, like, I mean, because you asked these pointed questions, I said ETH, the asset, but really, like, the reality is that you have to take advantage. Like, you're basically, all of us are like running businesses of various kinds, right? Like, I mean, and wherever the opportunity is, wherever the users are, wherever the volume is that's you cannot be a tribalism at a mindset, for example, and say, no, I'm not going to touch Solana because like Solana doesn't agree with my like this belief system, for example, or whatever, right? Like, I mean, essentially, if as a business there is activity happening there, of course, I mean you go where the distribution is really, right? Like, I mean, so it's as simple as that. It's just that I've been in the Ethereum ecosystem longer, so if you ask me asset, yes, but community ecosystem, like wherever it is the strongest, right? Like, that's your duty as a business, as a project.
Perfect. Yeah, no maxis here. We are open to business with everyone. Please, everyone, come to us. Be nice to us. We are nice to you, all of you. Fantastic. No, thank you so much, both of you, for making time. I know we've gone over time, but it's been fantastic speaking to you guys about this. Would love to have you guys back for another round of talking about various sorts of things. It's thoroughly enjoyable on my part. I hope everyone else liked it. Thank you guys so much.
Thank you so much. Thanks for having us.
Thanks for having us as well. Bye.